All right, welcome back to this week's live stream. In today's video, we'll be going over the major indexes, including S&P 500, NASDAQ or QQQs, the growth ETF IWO, along with RK. After that, we'll break down the 12 stocks that I have on my potential market leaders board, a few long setups, a few short setups, and then any stocks that you guys want to see in the comment section. So if you're in the video and you have a question about what I'm talking about, use the comments. I have them up. I want to make this as interactive as possible. And if you have a question, chances are someone else on the stream has a question, or someone else watching this later will have that same question. So with that said, we'll go to the charts. And as you can see, we're using MarketSmith, the trading research platform. The trading research platform today. This video is sponsored by MarketSmith, so if you like what you see and want to give it a try yourself, there's a link in the description below to do just that. So first off, taking a look at the S&P 500, we had that reversal day 2 now CPI numbers ago, where CPI came in hotter than expected, and we were already near the lows, gapped down about 3%, reversed on that day, and that has, at this point, marked the low of the market. From there, we had a nice rally, undercut the 50-day, the 21 and the 8 again, and then another push higher into the 200-day moving average. Last week, everything came on lighter than average volume because it was a holiday week. The market was closed on Thursday, and then we had a half-day Friday, so not many institutions were putting money to work or taking money out because there was just less liquidity in the market. Since then, on Monday, we had another stress test of the market, and S&P 500 dropped, 1.6% back under the 8-day EMA. Today, only down 0.2%. Not anything terrible there, but did close under that 8-day EMA again. In a perfect world, we kind of build out under 400 and then press over 400 and that 200-day moving average with a little bit more steam. In a worse world, we want to see how this pulls back and tests the 21 EMA along with the previous highs here around 390. So as you can see, the two pullback days have come on lighter than average volume, but not too bad there. So next we have QQQ. This has been underperforming the S&P 500. You can kind of see this blue line to the left here. This tracks the average performance of whatever stock that we're covering compared to the S&P 500. And for a while now, this has been in a downtrend with the S&P 500 outperforming the QQQs or the NASDAQ 100. So instead of being right near the 200-day moving average like the S&P 500, QQQ is well below that. Did break the 8-day EMA yesterday when it was down 1.5%, and then also broke and closed under the 21 EMA today, being down 0.8%. So not ideal action out of this ETF. What we want to see is at least the 50-day moving average hold around 276. That should be going pretty flat coming up here. So 276, that's an area to watch on the downside. Otherwise, if we can get going to the upside, coming over this 288 area, that would be ideal. The growth ETF, IWO, this is what I track that most correlates with how aggressive I want to be with my swing trading. Because I typically trade growth stocks, not so much in 2022 because growth stocks have been showing relative weakness, but this does kind of paint a picture of when it's the best times to press the pedal and make a lot of money in a short period of time, and also the times where you need to take your foot off the pedal or off the gas and press it on the brake, because in these major kind of swoops down, this is when we don't want to be involved in the market. So what you can see here is we actually closed above the 200-day moving average for a little bit. I think that was 2 weeks ago, but since then, just kind of chopping around. It has closed under the 21 EMA twice now, just right at it basically. But on the upside, we're looking for that 200-day moving average and breaking over kind of a previous area of resistance around 228. And then on the downside, this 220 area, it's a little bit above the 50-day moving average, but that's where the previous rallies had run into resistance. So when you close above that, you want to see potential support there. So that's IWO. And then finally, RK. I keep track of this just to see what type of stocks are actually moving if the IWO is moving up. Do we see the stocks in stage 4 declines and it's just the really oversold stocks just bouncing higher, or is it the quality setups that we can actually trade as swing traders with a more can-slim focus? And as you can see, this is nowhere near the 200-day moving average. It's actually under all the key moving averages. And to be perfectly transparent, I am short RK at this point. So it's good to see weakness in an ETF that is basically a basket of stocks in stage 4 declines, while IWO is holding up a little bit better. But when we look at QQQ versus S&P 500 or SPY, we're seeing that we don't want to be focused on tech if we're on the long side. On the short side, if we're shorting the market, then tech is where we want to be going, because we always want to be deploying capital in the direction of the relative either strength if we're buying the stock or relative weakness if we're shorting the stock. So that's a little quick look at all the ETFs that I keep track of. Next, I want to go over how the leadership stocks are looking. Every day I track about 12 stocks that have potential market leaders, or are my potential market leaders. This list I change. I try to keep it relatively steady, but if a stock breaks under the 50-day moving average and really starts to roll over, I'll replace it with another name that's showing relative strength. So first we have AEHR, and also let me backtrack. We do want to also keep track of how the leaders are doing compared to the indexes, because we want to see a positive divergence with the leaders holding up better than the indexes. And we don't want that divergence to keep continuing on and get larger and larger, because eventually, if the indexes are all the way at the bottom, people need to sell their winners to pay for their losses. And with most people invested in the indexes versus the individual stocks that are leading the market higher, eventually we do see the leaders crack. And we saw that with some of the some of the solar stocks in October, right before kind of the most recent pullback bottom, where this divergence got a little bit too large, and then all the leaders 1 week just flushed before we started a new uptrend. So let me go back to AEHR and kick this off. So AEHR, semiconductor stock, monster mover this year, has gone from $6.71 all the way up to $26. Even the past couple days, today it was basically flat. Yesterday it was only down 3.4%, still above $25, still above a rising 8-day EMA. You can see buying support comes in there. So on extra market pressure, does 25 still hold? That would be incredible. I wouldn't really expect that if the index is cracked to the downside. I wouldn't really expect the 8-day to hold or 25. But does this rising 21 EMA hold up? And also the previous area of resistance now turns support, 23, right around there. Now, this is a pretty big base. Ideally, you don't want stocks from high to low in a bear market to be more than 40%, 45% at you're getting there. And this is around 70%. So a lot of canceling people will just say that this base is flawed and there's no reason to trade it. I'm just keeping a list of stocks that show the best relative strength, and this is definitely one of them. That's AEHR. Next, we have Celsius. Last week, they announced, what was it? We could check MarketSmith really quick. So news. Let me just pop it open. No, this is on earnings. They had some announcement last week. Sorry, I should have had that set up. But that really moved the price up 11.5%. And this was the day after some pretty shaky price action. I had this kind of on my list of leading stocks that I might shed from the leaderboard. Sorry, let me minimize that. But it closed back over the 50-day moving average, then was up 11.5% the next day. Continued to push higher, up 5%, and now we're just pulling back to that 8-day EMA. Now, this action, ideally would be holding this $100 area. We'll see how that holds. But there's no low-risk entry point on this one just yet. Even on this news-driven price action, I don't tend to trade stocks based on news. So I don't know. I haven't found a way in this stock after the oops reversal that I traded it on the 22nd, but I haven't held it since then. Next we have DGII. This stock had a nice shakeout today under that 8-day or under the 21 EMA, under $40, but closed high in the range. Excuse me. Closed higher in the range, still under the 8-day EMA, but not too bad. This is in computer networking, the sixth strongest group in the market out of 197. Has the earnings, has the group strength, accumulation distribution, 99 composite, 99 relative strength, really checks all the boxes here, except for the low risk entry points that we're looking to actually put exposure on in the market. So even though this did pull back and undercut that 21 EMA, it didn't close under it. So this pullback isn't too scary just yet. And as you can see, as we're going through this, not many of the leaders are really breaking down. So while the QQQs are starting to roll over and S&P 500 got rejected at that 200-day moving average, it's not like we're seeing the market completely collapse behind us. End phase, some of the solar stocks, we'll go through like all four of them, or all four that I'm tracking really quick, but had a rough couple of days. End phase was right at that 325 pivot, ready to break into new highs. But like many stocks in this bear market, once it gets right up to new highs, it might punch higher for a second, but then kind of pull back before actually starting to trend higher. And that's basically what we saw. It came up to 324, now back through the 8-day, and closed just above $300 and the 21 EMA. 21 EMA now is at $301, so really key area to hold. At least the closing price would be above $300 for this setup. First Solar, I had a position in this. I cut my last remaining shares today as it took out yesterday's low. And it was getting wedged up here. So as we continue to wedge, I kept on just taking a couple of shares off. This was about a 10% position in my account. So I sold like 1%, sold 1%, 1%, 1%, and then the remaining, I think I had like a 4% position left going into today. And then it started off fine, but as you saw today, the market started off pretty strong and then wilted towards the second half of the day. And this came back through, undercut yesterday's low and that 8-day EMA, and I just cut it to lock in some profits. Airy is not a stock on my leadership board, but also another solar stock that had a pretty rough 2 days, down 7% yesterday, 3% today, both on above average volume. That's not ideal action that you want to see out of the leading group, which Energy Solar is the fourth leading group out of 197 in the market. And then SHLS, also not in my 12 leaders, but a solar stock that was down 6.4% yesterday, 3.8% today, back through that 8-day EMA after a nice earnings pop. So the solar group, it's very, very heavily watched by canceling traders or swing traders, and the fact that that's rolling over isn't a great sign. Now none of those stocks are completely ruined just yet, and none of them are even close to their 50-day moving average. Actually, maybe end phase. No, even end phase is 7% above the 50-day. So none of these charts are destroyed. I don't want to over dramatize it, but we do see a little bit more weakness the last 2 days than we would have expected. Next we have EXTR. This is in computer networking, sixth strongest group. Really nice lower volume pullback. Yesterday down just 2%, today down 0.7%, 0.65. Bounced right at that rising 8-day EMA. I would, for this setup, if I'm not in the name and I'm not in it yet, I would rather just see this kind of build out under $20 and then break through 20 as the market's actually ready to rally. So this one, absolutely not doing anything wrong. GFS has had a pretty rough last 2 days. This is one that got out over 60 and then just started wedging up. It did have the shakeout day on the 17th, but outside of that, never really like cleared the deck of the weaker hands, wedged up and then broke through the 8-day EMA and pulled back into the 21. Yesterday down 5.5%, today down 1.6%, closed right at the low of the day and right on that 21 EMA. So I don't see the 21 EMA holding on this unless the market is strong tomorrow. We do have Powell speech at 1:30 Eastern time. So before that, I don't plan on trading anything. There's going to be a lot of volatility, just like an FOMC meeting. You'll see a lot of volatility going into that action. And then when he starts talking, you'll really see volatility spike up. And as a low risk trader like myself, trying to put on 3%, 5% stops on any trade that I place, I'm more likely to get stopped out before any true action whenever he's speaking. So I am going to be starting tomorrow, not 100% cash, no long positions, just short RK. But GFS, semiconductor stock, that it looked promising. I wanted a more calm kind of pullback, but we'll see if this 21 holds. Otherwise, just kind of pulling back into the $60 range. Wouldn't be the worst thing in the world, but obviously not ideal action. HLIT, pretty good action here. This is one that, as it was hovering around the 50-day moving average, I was thinking of taking it off the leadership board. It found buying support right at that area. Had a nice day, up 7% from there, and then just trending above that 8-day EMA. Low of the day, undercut it today, but still closed above, so not doing anything wrong. Also on lower than average volume. This is in the telecom, cable, satellite equipment group, 14th out of 197. So a lot of these leading stocks, I tend to cluster with leading groups. There are semiconductor stocks that make this like potential market leaders group, and semiconductor group as a whole isn't super strong. Speaking of which, ON Semiconductor is next, and you can see Semiconductor Group, 123 out of 197. Not as strong, similar to GFS, not strong action yesterday, down 4.7%, right on that 21 EMA. Today, inside candle, closing above the 21 EMA, closing above $70, but still no low risk entry points on this one, very choppy. Although the relative strength line continues to go in an uptrend, I haven't found a way to make like a nice amount of money with a low amount of risk on the stock all year long. So it's one that kind of like CCRN had been. Although it's been in a nice uptrend and the relative strength is there, you still need a stock to have the characteristics that fit your trading style to really get low risk entry points and to have more or to skew the risk reward in your favor. And just like CCRN, ON, I haven't found those type of entry points to trade that in 2022. Maybe as the market improves, we'll get those. But we don't want to force anything, right? Next and last semiconductor stock is PI. This is one that had earnings up 950%, sales up 51%, after-tax profit margins up 14%. We've talked about this many, many times. Up 620% the average daily volume, and a 30% move here. From there, just kind of pulled back, did bounce at the 21 EMA twice, consolidated, and then started pushing out into new highs on the 22nd there. And since then, respected 120 on the downside. So there were a couple days where the low is 120.34, 120.58, 121.36. So we keep holding 120 even as the market's coming in, and that's what's shooting this relative strength up into new highs. It is on the thinner side, so if you have any restraints with that, maybe this is a stock you avoid. But a stock continuing to make new highs, made another new high today in this bear market, is something that you at least don't want to ignore, at least have on a general watch list with that. So this one obviously not breaking down, good to see. RYTM is actually starting to look maybe ready for a distinct move, either up or down, but we're starting to see price action tighten up again. This is a stock that ran from $5 up to $30, and after that, it deserves a couple months of just trading sideways. And even after that move, we did bounce at the 50-day and undercut it a little bit, but we never really rolled to the downside and had a very strong move down. So the fact that it didn't just completely collapse after a move from $5 up to $30 in this pretty tough bear market that we've been in shows some really nice strength. So this is one where a couple more days tightening up, especially if we can tighten up under 25 on market weakness, that would be a nice potential entry point there. It is one that I'll be watching for tomorrow, but I'm not trading anything before Powell speaks. And then last leader, and then I'll get to some of the comments that you guys have, is SMCI. This is in computer hardware, 56th strongest group out of 197. But you can see the fundamentals down here. Earnings per share is up 40, 210, 223, 490. So earnings are accelerating, not just growing, but they're also accelerating. Sales up 41, 51, 53, 79. Sales are accelerating. After-tax profit margins are improving and accelerating as well. So if you follow Mark Minervini on Twitter or if you've read his books, this classifies as the code 33, where you have earnings, sales, and after-tax profit margins accelerating for the last 3 quarters. And we can run that scan and see how many stocks are on there using MarketSmith. There's a code 33 scan that you can look at. And it looks like only 37 stocks made that list. So fundamentally, very strong company, obviously. And price-wise, this is wedging up, obviously. This isn't a low-risk entry point by any means up here. But the fact that even as the market is starting to show some weakness, especially QQQ showing weakness, this is still above a rising 8-day EMA. That 21 EMA is in a near vertical line trying to catch up. And we don't want to buy already extended. We do want to wait and be patient for the low-risk entry points. But we're still seeing positive action on the leaders. So out of all 12 stocks that we just covered, none of them are under their 21 EMA. Only one have undercut that 21 EMA, and the close still held above. So while we're seeing the market or QQQ start to break under the 8, the 21 EMA, come back to the 50-day, SPY get rejected at the 200-day, I'm at least not at a point where I feel very strong in either direction. And with the Powell speech coming up at 1:30 Eastern time tomorrow, I don't want to have a ton of shorts. I don't want to have a ton of long positions on. And I just want to stay neutral, both position-wise and mentally, because we can get some news and the market can roll over tomorrow. And that divergence between the leading stocks and what the indexes are doing can get too large, and then we'll eventually break to the downside. Or we could get positive news from Powell. He starts saying, maybe with inflation coming down, we could be a little bit less aggressive with our rate hikes. And that would be the positive news that we would need to get the S&P 500 back over the 200-day moving average. And then these leaders that pulled back, especially that solar group that's showing the most weakness out of the stocks that we covered, they can just take off again. And then we're off to the races, all good things. So what I'm saying is the deck isn't super hot, taking a term from Ross Haber at Traderline. The deck isn't super hot just yet, but we're starting to see like both good and bad things enough to where you're going to see quality setups both on the long side and the short side. And then if the market, whatever direction the market decides to take, you can take those setups either shorting or going long and have some low risk entry points there, which is positive. And as a swing trader, I mean, in a perfect world, we're in a bull market. That's the easiest time to make money as a swing trader. If you're shorting a stock, it can only go down 100%, and it's not going to go down 100%. But in a nice bull market, stocks can go up over 100%. So I would rather trade in a nice bull market. I would rather see the market rally, but we could still make money on the short side as well. As long as we still use low risk entry points, we're still using stop losses whenever we trade. All right, now let me get to the comments really quick. Hi, Nick. I know you like to trade breakouts. Given the current market conditions, have you changed my entry tactics or used options to hedge? So I haven't used options. If I'm trying to scale back on my risk, I will just scale back my exposure, sell stocks. With options, there's a lot of moving parts there with theta decay and also volatility, where I would rather have as simple of a strategy as possible. So when I gather data from the market, I don't get a bunch of noise. And I just find it a little bit easier managing risk with stop losses on my current positions and position sizing versus trying to trade options along with that. I'm not really trying to hold for over a year to get the tax benefit. So that would be the only reason I would see to use options to kind of buffer the market conditions out. But personally, I don't do that. When it comes to breakouts, I'm definitely not buying breaks into 52-week highs. Those have been spiked pretty consistently. And also, like, if a setup is too obvious and it's like one of the only setups in the market, I posted a tweet about this today, where if the market conditions are really poor and all the swing traders or all the canceling guys are looking at the same 10 names in the market, well, then those stocks are going to be crowded by investors or traders that are very low risk people that have been trading through the 2022 bear market, trading, not just investing long term and are going to hold forever. So the characteristics of that stock or that setup is going to be much, much more volatile. And I keep going back to the stock TH on this because this was a stock that had a triple inside day going into this Friday on the 19th, right? Yeah, on the 19th of September. That this was one of like the 3 or 4 setups that everyone was watching going into this day. It was also an FOMC meeting. And of course, we break to the upside and all the swing traders pour in. It was up like 7% at one point. And then immediately, as the market was coming back down, all those swing traders are like, all right, I'm going to grab my 6%. I'm going to grab my 4%. SWAV was also a great example of this, where heavily watched by swing traders. We had a couple of warning signs with these distribution candles here and here. But as we broke the 50-day moving average, this spiked up and then sold off pretty hard this day, closed middle of the range actually, had a similar action the next day, and then undercut the 50-day. So whenever you have a lack of setups, a lack of quality setups in the market, also typically like a lack of potential leadership groups. So if only solar stocks are holding up well or only oil and gas stocks are holding up well, you just have to know that any trade you take is going to be more crowded by swing traders. And as swing traders, we're the weakest hands in the market. I'm calling myself a weak hand because I'm one of the weakest hands in the market. I'm looking at my trading stats and saying, well, Nick, when my last 5 winners, what's the average gain on those? 5%. So if I get a trade up 5%, I'm at least going to be taking partial profits into that move and then trying to move my stop loss to break even. And all the other swing traders are probably doing something similar. So if there's a lack of setups and if the market environment isn't very strong and market breadth isn't strong, you're going to see very choppy action. So if you're going to trade them, that's fine. You just have to know, like, okay, there's other swing traders in this name. I got to sell a larger portion than I would have in a bull market right away and try to move my stop loss to break even because you do tend to see these like breakouts get spiked. CPRX was one, breaking a new high, spiked yesterday. And we just got to be a little bit more careful. So when I'm swing trading and I'm trading in this market, I'm trying to find like lower entry points against a moving average, typically the 21 EMA, but also like if the 8 and 21 are really tight next to each other and I can get a day where the high of the day was 1% above both of those, that's the area where I'm trying to buy, not extended and not like a clean green line breakout or a clean break into new highs. Anything that you could just draw a line across, that's going to be, if you can see that and I can see that and we're all just drawing those lines and that's one of the few setups in the market, that's going to be a liquidity zone. And if people in a bear market are using liquidity to sell into, those areas are typically going to get spiked. So if you do enter a trade and it goes through that buy point, like that perfect buy point, and then immediately reverses and you lose the pivot, 9 times out of, or I shouldn't say 9 times out of 10. I haven't done the true stats on it, but every time this year, I've just been selling those right away, even if before it hits my stop, because I want to avoid any full losses if I can. And you tend to see those, like, if that breakout point, the obvious ones don't work and hold on the pullback and just immediately undercut it, they tend to keep selling off and using those that liquidity. So I am adjusting my entry tactics and also my expectations of the trade given the market environments. Good question. Okay, Tony. Struggling with finding those nice low risk entry points. Could you show an example on the charts? Yeah, my first solar trade wasn't like a perfect low risk entry point. It was a pullback to that 8-day EMA, but it came on. It came intraday, so that's not like super clean. One that I'll talk about was HDSN. Now this one I actually entered probably 2 days earlier than I should have. I sold the rest of this today because again, I'm going in tomorrow with no long exposure. But this was a stock that was right near highs, actually made new highs. So this is a perfect example of like everything that we were talking about. It made new highs and immediately spiked that. Was down 3.4% after making new highs, breaking into new highs. So people saw that liquidity and sold into that move. Now, because I don't want to trade that first kind of break into new highs, doesn't mean I just throw the stock chart away, because it's showing relative strength. It's a stock that I want to keep on a watch list. But after that move, does it pull back to that 8-day? And then do we see price tighten up and volume tighten up? It's pretty easy to see the volume just falling off a cliff here, really tightening up. And then also price-wise, still above a rising 21 EMA, but you could see how tight price got. And then I actually entered with a break over the previous day's high here, which also correlated very closely to that 8-day EMA. It says it was 0.7% higher than that. So I got in at like 10.50, 54, I think it was. Between 10.54 and 10.58 between all my accounts. And then it actually closed slightly below that, 10.53. So I was basically break even on that day. Inside candle the next day, and then day before Thanksgiving just broke out, up 6.7%. And I know, looking at my notes, hey Nick, your average gain on your winning trades is about 5%. Let's sell some into strength there. So I sold a quarter or a third, I need to check my notes, into strength for about 6%. And then yesterday, continued to break into new highs. It was up about 3% from the previous day's close. I sold another third into that move. And then today, and then look, so it was up like 3 or 4%, and then gave up everything from 11.85 to close at 10.86, still above my entry point. So I still kept that last piece on. And then today it was up about 2% at the open. So I just sold into strength there. Now this is a trade that it could prove me wrong. It could still get going. But I found that low risk entry point. I sold a piece into strength. And by doing so, and then moving just half my stop loss up to break even, it was a risk-free trade. Even if it came down to hit my stop, I wasn't losing any money. And if we didn't have a Powell speech tomorrow, if the market wasn't deteriorating like we were seeing in the background, I would have still kept a majority of the trade. But I'm adjusting how I sell and how I manage my positions based on the market conditions. So this is probably one of the better examples of those low risk entry points that I have. All right. How much exposure am I at right now? I'm about 20% short, just using ARK as a short. I don't have any longs right now. Let's see. How many hours do you screen every day on the weekends? So on the day, the only two screens that I run every day is the relative strength new high. And you can see here, whoops. It's just current price over $7, relative strength line hits a new high, yes. And I want some liquidity, so 50-day average volume over 100,000 shares. I'll also run the up on volume screen. And then this is a couple other things, but basically I just want to capture any stocks that have a large adjustment or a large change in supply and demand. Typically this is earnings, it could be FDA approval stuff, but I always run those two scans. Those are the two scans that every day I'll throw those charts, or I'll collect those charts and go through those manually. But on the weekends, that's when I'll run the other scans that I have here, the Minervini Sales 33, Minervini VCP, and Focus. This is, I think Ben Bennett wrote this one, along with some other screens that I run in FinViz and StockCharts.com. I would say compiling my world list of stocks on the weekends, it would take maybe 30 minutes because I've done it so many times now. And then from there, it's a list of, depending on the market conditions, between 300 stocks and 600 stocks. And I tend to just manually go through those, and that'll take, on the weekend, I'll probably spend 3 or 4 hours going through individual stocks along with the group strength. So MarketSmith has the group ranking, so I'll go through those, just scan those super quick. You can do this, show the 197 groups, and then you could just, let me hide that and that, and then you can just click through. Oh no, I have to have this open. But basically with group strength and then like individual stocks, I'd say on the weekend I'm spending like 4 hours, and then getting my breakout watch list ready, that'll take another 2 hours. But I love it. It is what I love to do. But all right, before we get to your guys' charts, I do want to go over a couple on my watch list. I'll do this really quick so I do get to your charts, because I think anything that I talk about, upside, downside, is going to be to the will of the market here. Just a couple of stocks that I'm watching. Biotech stock, AKRO, rising 8 and 21 EMAs, inside candle today, a little extended from the 21 EMA, and it has also already had this nice run up. So I want to be a little bit more patient with this one. I just think it's holding up well. AM, one of the oil and gas names that has a couple shakeouts, but pretty tight price action, right near a pivot around 11.15. ATEN, I think this one's shaping up really, really nicely. It's in a weaker group, which isn't ideal, so that does one yellow flag on it. But on a weekly chart, you can see nice base coming up here, and now we're consolidating after making new highs. So again, we're not chasing stocks breaking into 52-week highs. Those tend to get spiked in the bear market. And you see a 3-day spike from new highs at 1797 or 1979, sorry, all the way back to the 21 EMA. But now we're consolidating above that, always closing above the 21 EMA. Really tight price action, and a couple more days would improve this setup drastically. You could take this just with a break over today's high, but I would rather buy it a little bit higher at 1850 with more confirmation that the general market structure is working along with the individual name. So that's ATEN. CEG, this is a stock that I've traded a couple times this year. Although it hasn't been like super gains, I've always made money trading it, so I do feel a little bit more in tune with this one. Made new highs, pulling back to the 21 EMA the last couple of days. Let's see, down 2%, 2.5%, down 0.5% today. In that alternative energy group, which was a lot stronger, now it's at 102. Not great, but this price action, relative strength line is doing really well. CTVA, I think Leif posted about this on Twitter, but agricultural operations, made new highs, pulled back to that 21 EMA, had a couple shakeouts, and now I think the low was 64.97, right around 65 today. Let's see if we can curl this up and see how it handles 66.30 area. DICE, this is a stock that, biotech stock, IPO. We go to a weekly chart super quick. Nice cup, putting in the handle, that rising 10-week moving average, 50-day moving average is now at $30. It looks like it's starting to kind of curl up to the right. You have 3-day pivot right around 33.86 or 33.80, whatever you want to call it, 33.85. So that's a potential entry point, especially if we open lower and then take it out. I don't want to be chasing any gap ups regardless of how strong the stock is, the group strength, anything like that. In a bear market, I'm only getting 5% on my average winners, 5 to 7%, 7% when things are really working, 5% I would say normally. So if I'm only getting 5% on my average winning trades and I give up 2% trying to chase a gap up, that's 40% of my average gain that I'm giving up. So I'm either nailing these entry points or I'm just letting the stock go and do its thing without me. But this is one of those biotech stocks that I'm keeping on a watch list. No earnings, no sales, very much just a technical play. You do have to size down on these because of that. EE, this is one I know Leif posted about. He took this trade up 9.6% that day. Went into new all-time highs, and then what happened? Oh, it got spiked at 52-week highs. Who would have known? It's a great, I'm being facetious here, but I want to drill this in everyone's head. We don't buy just flatline breakouts in a bear market. We don't buy stocks at 52-week highs in a bear market. Not to say we're ignoring stocks making 52-week highs. Those are the stocks we do want to be trading, but we don't want to be trading them at those obvious pivots. We want to wait for a pullback to a key moving average, tight price action, tight volume action, and then get that low risk entry point. We want to do as much as we can to stack probability in our favor, but at the end of the day, you need to get it through your head that any individual trade, there's going to be a bunch of randomness. But over 1,000 trades, when you stack those probabilities in your favor and you use very tight stop losses, the risk reward's in your favor. So when people say like trading is gambling, I never get mad at that, because at some point I'm making a monetary wager on an uncertain outcome. And if that's the definition of gambling, I don't know if it is, but I don't mind thinking of it as gambling, because it also just allows me to know like I'm not going to be right every time, so I have to manage my risk. So for me, I like thinking of trading as gambling because it makes it uncertain, which it is on individual trades, and it makes me prioritize risk management. So this one got out, made 52-week highs, pulled back to that 8-day EMA, inside candle today. Nice relative strength, up 1.7%. We'll see if this tightens up a little bit more. FDMT, lots of volume coming in from, what was this, $8 up to $24. Not giving up much space. Tested that $20 range. Low was $20.04, so round number held right there, which is a great sign for liquidity. There's extra buyers coming in. Another biotech stock, so if you don't trade biotechs, just ignore this. But looking at 24.16 area for that. MGNI, another name that like had that pop power, has pulled back, has undercut $10 a little bit, nothing fully, and has a bunch of overhead supply. So not an A+ setup, one that I'm looking for an entry, looking for a very quick move to the upside and just selling at a strength on that if I do trade it. SANM, this is one that I'm trying to be patient with my entry. I do like everything going on with this. This could make it on the potential market leaders list very easily. Something just needs to break so I can replace it. But electric contract manufacturing, second strongest group out of 197, has the fundamentals. Earnings are accelerating, sales are accelerating, after-tax profit margins are positive, price above all the key moving averages, all the moving averages are in the right order, 8, 21, 50, 200. Price is now just under the 8-day, but pretty tight price action from 70 down to 63. So what is that? Just a 10% pullback from that move. In this market, that's fine. I just want to see this kind of tighten up a little bit and then go from there. 3 more, RMBS. This is another semiconductor stock. Beautiful consolidation after move from 25 up to 38. So what is that? 40, 15, 60% move? 60% move up. And then really just textbook consolidation. Nothing's really breaking. Yesterday had slightly a bad day, down 1.4%. And then higher highs, higher lows today, up 1%, while the index, the QQQs were down, 0.7%? Yeah, 0.7, 0.8. So RMBS, probably the cleanest looking semiconductor stock right now. And this is one that is at all-time highs. Really nice consolidation. Does trade a little bit on the thin side, about 900,000 shares traded. So if that is a requirement for you, or if 1 million is a requirement for you, then you have to pass it up. But I still think it looks pretty nice. TMDX, also another thinner name. Haven't found a nice low risk entry point just yet, but another one that made new highs, pulling back. Shook out the 8-day EMA today. Maybe just a break over today's high if the market opens lower and we stay down until Powell's speech. Again, don't want to put exposure on until then. And then YOU, had an HVC, highest volume, or not an HVC, sorry. It had a high volume move on earnings, up 16% on 500% the average daily volume. Nice closing range, right below $30. Traded sideways for a little bit and then got going. I think this was last Wednesday. And now just pulling back orderly to that rising 8-day EMA. Bounced at it yesterday, inside candle today, just a break above the high today would be a potential entry point. And then UTHR, this is one where this is the all-time high, so I don't want to buy this. I want to see a breakout of this area, let it get spiked or come back to the 8-day again, and then get an entry point there. So those are the stocks on my long watch list. Super quick on the short end. Airbnb closed at the low of the day under all the key moving averages. got bounced right at that 50-day on the downside, so that is pretty weak. AFRM, I do have a small short position in this. You can barely even see the chart. That whenever it's a hard chart to see on MarketSmith, you know it's a garbage stock, and that's the stocks that I want to short. Datadog closed right near the low. Today's entry point, like breaking under yesterday's low, would have been a more proper entry point. But if we kind of rally up to the 8-day and then roll over, that would be fine as well. IPI, this is a fertilizer stock that had like a hyperbolic move up to 121, got rejected at the 200-day, just kind of wedged up, gap down, and now a break below 35. What was the low today? 35.10? Yeah, a break below 35 is a potential short there. Tesla continues to act pretty weak. I've shorted this twice successfully, and then I took off my short on this yesterday for a 1% loss to put a short position on AFRM because it was the weaker stock, and I still think this can just roll over. It's not even at the 21 EMA, while most of the indexes are above that. And then Amazon, just the large stocks, Amazon, Google, Meta, Tesla, they all look very, very bad. And that's why QQQ is underperforming SPY, which is underperforming IWO, the growth ETF. So I think that's everything on my list. Let's get back to the comments so we can get your questions answered in the last 13 minutes before I go. All right, IRDM. This is one that I've had on my watch list. Haven't gotten an entry point on it just yet, but I like the way it respects that 50-day. It's pretty wicky action, so those stocks tend to be a little bit harder to trade when I'm using like a 3% stop, which in a bear market, I'm really not trying to lose money. Like that's not losing money in a bear market is my number one goal. From then, it's like, okay, can I make those 5%, 10% gains? Not doing anything too wrong. Chart hasn't broken down. Support at that 21 EMA. If you were in it lower and you've made some money on it, your stop's just under the 21 EMA. And then if we flush tomorrow and the market breaks down, you're out with some nice profit locked in. But fundamentals are strong. A little bit lighter traded, but let me see a weekly chart of this. Yeah, I wouldn't mind if this like continues to build out to the right, allowing that 10-week moving average to catch up to price, and then we push out. Because we saw what happened the last time the 50-day got bounced right at 45. What was the low? 45.64. So not doing anything too wrong. I don't like this distribution candle where it just flushed 6% and closed under the 21 EMA on one day. That's like one warning sign that SWAV had, but this was break under the 8, the 21, and the 50-day, so it's not nearly as bad as that warning was. Just something we want to keep track of. Like, we don't want stocks. We want to be buying stocks that institutional investors are buying up because we want to be riding their uptrends. And if they're pumping liquidity into a name, you better believe that on a really steep sell-off day, they're going to be pressing the gas and supporting that price action and buying more. If you have a day where a stock just collapses 10%, there's a lower probability. We can't talk in absolutes, right? There's a lower probability that there's a consistent bid on that stock by an institutional investor. So whenever you see those quick moves down through key moving averages or through round numbers on above average volume, it's something to note, at least. Wingstop, under the 21 or right on the 21 EMA right now. Price needs to tighten up before I trade it. This is another name that has been on like my general watch list all year. I just haven't found an entry point on it. And PODD, yeah. I was thinking you saying PDD, Chinese stock that just broke out of its stage 1 base, now in a stage 2 uptrend. You got the 200-day starting to curl up. But PODD, nice consolidation. Pulling back to that 21 EMA would be just fine. Kind of like dice. I know it's not the same, but if we pull back to that 21 EMA and then price starts to curl up to the right, I think that would be a little bit cleaner than just buying like the first kind of bounce off that move. Depends what you're looking for. If you're looking for like a 3, 5, 7% move like pretty quickly, well, probably not a 7% move in this stock, but you know what I mean. If you're looking for just to trade the reactionary bounce, then you could do that. But if you're looking to hold for more like a 15% move, a 20% move, then you want to give this time to start to curl up to the right before you put risk on. SGML, this was on my leading list, but it broke through that the 21-day EMA, down 8.8%. The next day we broke the 50-day. Now this is starting to shape up like a potential setup that I've been watching where you break the 50-day, your first rally above it fails and peters out because you have overhead supply and you broke down so quickly. So you kind of rally, break through the 50-day, and then you check back, build underneath, and then pop it. CPRX did this beautifully, so quick move down under the 50-day, rallied up through it, failed, started to build under, and then we had that nice move. So I am watching SGML, but I'm being more patient with it to go through that fluctuation before I put risk on it. What else did you say? TH, we kind of covered this earlier. Not the most recent price action, but that triple inside day and then failure. Nice move through here. I think we had, not technically an inside day today, higher highs, higher lows, but still kind of captured within Friday's price action. I would love for this to kind of shake out under the 8-day because this is another stock that a lot of swing traders are watching. So I would like a shakeout under the low from yesterday and kind of build under 14 so we get that lower risk entry point right around that 8-day EMA, but still a stock to monitor. Just know a lot of swing traders in this, kind of like SWAV, so you have to trade this accordingly. I just covered. Flex, this was also on my kind of not focus list, but every day I go through my stocks and then get maybe 30 stocks to narrow down and then set alerts on. This is one of them. Not doing anything wrong above that 8-day EMA. Strong group, second strongest group in the market. Already has made those 52-week highs and now starting to pull back a little bit. In the perfect world for this setup, we'd have the market kind of pull back even stronger, allow this to pull into 20 and the 21 EMA to catch up, and then we would get a really nice entry point on that. But if you're already in the name, it's not doing anything wrong. Really good stock, pointed out. All right, let's see. Do you watch IBD Live? So because I'm sponsored by IBD, I do get all the subscriptions for free as well. So I do watch IBD Live, especially I really like the end of day stuff just to put that on as I'm going through my stock screener. I love stocks. I love trading. I love listening to anyone talk about trading. So whenever I have an opportunity to do that, I do. Boeing, I keep getting surprised that this is acting pretty well, but it is. It's acting pretty well. It's above all the key moving averages. The 50-day is still under the 200, so it's not the perfect order of moving averages, and you still have a lot of overhead supply, obviously, on this name, but for that 7% to 10% move, if you're a swing trader, it could work out. It's just a lot of overhead supply. So watching 180 to see, does that get bid up or does that get sold off into? But I probably won't trade it myself, but it is kind of what you want to see. Heavier volume coming out to the upside, a clean break through that 200-day moving average. We stopped one day at it, but we stopped right at the high of the day and then pushed right through it. So pretty clean action at a key moving average, which you saw get rejected once, twice, 3 times, all the way on the way down. So definitely a changing character on this name. I just think there's a lot of overhead supply. So like MGNI, you could trade it. I would just like expect to sell into the first move. Trading IQ, I'm glad you're here too. Okay, I thought you might try PCVX. I was watching this one too, and as it was going, I was kicking myself because it was on my focus list, right? Biotech stock, nice shakeout to the 21 EMA, price tightening up, volume tightening up, and then just boom, gets going. And this is exactly what I was talking about with a crowded trade. Trading IQ is always bringing the right charts to this live stream, but breaks out, and I was busy, I think, trimming some of my positions as it was breaking out. So I see this, it's up 8%, and I'm just kicking myself. I'm like, oh man, why didn't I trade that? Like I was focused on it, and then it just comes right back in squats. And I mean, it's still acting okay. It's not like we undercut the 8-day and then it's just rolled over, but this is the type of price action that you see in a bear market where there's few quality setups. And that's the market condition. So I bet you a ton of swing traders were in this at 44. They got a 7% gain, started selling a half of their position at their average gain on their last couple winning trades, and then it just squatted. But chart's not destroyed by any means. I would like to see like this false breakout. I want to see a shakeout and then price tighten again before I trade it, but I just want people to like ignore this name now after it's made that false breakout. I was subscribed to Leif's trading service for a while, and he would trade these false breakout, shakeout, tightening up, and then the secondary breakout all the time, and that's what I'm looking for with this setup now. CIX had a nice move. I was stupid. I traded AMR, sold this into strength in like the first couple minutes of the day today, but BTU got going as well. I just chose the dud out of the name or out of the group, but yeah, CEIX, really nice move. BTU, the other coal name, coming up to 52-week highs. Again, we don't want to be buying at that area. We want to be buying after a pullback, some consolidation, stuff like that. DXCM, this is one that I've been watching as well, but the relative strength line is just like kind of cratering. I know it's okay that it's pulling, like price is pulling back, but if the market was moving to the upside as this never got going again. So I'm a little bit more cautious with a stock like that. And this is also just personal bias. I've traded this a couple times in the past, haven't made money on it. So I don't know if that means like this doesn't fit swing traders as a whole, or if this just likes to make me frustrated, but just one of those stocks that if I trade, I'm going to trade it with a lower size because I haven't been as fortunate with it. All right. IQ did take a position in AN, but not worth risking. Over 85% cash. Yeah. AN, nice clean setup, move to the high. Not a high ADR stock, so you're not gonna make a huge jump in your net worth, and it's not going to damage you too badly if you get stopped out, 1% stop, 2% stop, anything like that. Keys, yeah, this has come up on my watch list as well. It's a pretty wavy pattern that doesn't respect key moving averages very well, so it's not likely to have a consistent bid from an institutional investor. Like we talked about this before, if there's a consistent bid from an institutional investor, which are the stocks that we want to trade because we want to ride those uptrends higher. Wait, which way? This way. Ride those uptrends higher. We'll respect round numbers, and we'll respect key moving averages like the 21 EMA, the 50-day, and the 200-day. This just doesn't respect it. So like while relative strength is moving up, and that's great, if we're going to find a low risk entry point and hold it for a bigger move, we want to do that in a stock that kind of has that consistent bid and has that respect for key moving averages. It doesn't mean that the trade can't work out. It just means it's a lower probability. KNSA, yeah, I've been watching that one as well. Pretty thin biotech. You do what you want with it. And then ABCL, another biotech that I've been watching, pulling into that 21 EMA as well. Not doing anything too wrong. It does have a bunch of overhead supply. That's the big downside to it. But does tend to trade pretty orderly for a biotech stock. So kind of going back to keys, we don't just want stocks with relative strength, like trending higher. We also need a stock that its characteristics matches our trading style or our swing trading style. Otherwise, it's like a beautiful girl with a terrible personality for me, and vice versa for anyone else. But we want to make sure the personality of the stock also matches what we're looking for as swing traders. We want low risk entry points with high upside and with less volatility around areas that we would expect lower volatility, like key moving averages and round numbers. All right, we are right at an hour. I have swimming in 30 minutes, so I got to get ready for that. Thank you guys so much for showing up. I really appreciate it. These live streams are so much fun to do. So if you guys enjoyed MarketSmith and want to give it a try, this is a MarketSmith sponsored video. There's a link in the description below. If you have any questions about MarketSmith or ever want to just hop on a call with me really quick to go over its features, I'd be happy to do that. You can email me at stocktrickswithnick@gmail.com. That is also in the description. Have a great rest of your week. Let's hope Powell doesn't tank the market tomorrow, and we'll go from there.